And now that those trade tensions have indeed escalated, Wall Street is expecting the Federal Reserve to take action and cut interest rates again. But just how many cuts does the street want? Steve Liesman takes a look.
In the wake of the tariff threats from the president and renewed worries about a currency war between the U.S. and China, markets are now more aggressive in pricing in the idea that the Fed comes to the rescue and cuts interest rates this year. The Fed funds futures market trading with a 74% probability that the Fed cuts its overnight lending rate by 25 basis points in September. There's a 73% chance it does another 25 in December, and it's toying with the idea of January for a third cut with a 48% probability. But is all that too aggressive? St. Louis Fed President James Bullard making the first comments from the Fed since this trade war blew up again, and he's not quite as sure about the direction of policy as the market is. Bullard saying rates are, quote, in the right neighborhood, and he doesn't really see the conditions for a half percentage point cut. He expects another cut this year, but says it's a, quote, losing game for the Fed to respond to all stock market movements. Also says that Fed policy can't react to the day-to-day give and take of a trade war. All of this suggests that markets may be a little more certain about where policy is going than the Federal Reserve is, and suggests the Fed is not going to react to every tariff move. Eventually, the Fed's going to have to see that tariffs are actually weakening the U.S. economy before it sets policy lower. This raises the question, is this the start of a mid-cycle adjustment of maybe just a couple rate cuts, or is it the start of a longer easing cycle? The Fed may come around to the view that it's a longer one, but it doesn't seem to be there quite yet. For Nightly Business Report, I'm Steve Liesman.